Buddy, this is my first ever YouTube video, and today I'm going to be looking at a stock that popped on my screen here, Genesco Inc., GCO, um, trading for $310 million market cap, peaked at a $71 a share, and now has fallen to 26.67. So it got absolutely hammered and wrecked. It's on the smaller cap side, so let's get into it. Obviously, when you're researching a stock, you want to go to the 10K or to the SEC. And I'm just going to go straight to the balance sheet. Let's go there. Okay. So when looking at the balance sheet, we're just going to do basically valuations on this and find risk with these assets, because I was going to do discounted cash flow on it. Then I'm like, there's really no way, because the company is just so inconsistent. So you want to pull up your handy dandy Excel file. Let's pull up Excel. Okay. And I'm going to put it over here and start copying stuff down. So we have cash. Obviously, you don't want to do just cash. 35,155. And they have accounts receivables of 53,618. Inventories, which is their biggest one. Inventories. Inventories of 378,967 million. And then they have prepaid and other current assets of 39 million. Okay, so I'm just going to show you guys what I have so far. Obviously, just put that there. Okay, so obviously with cash, you're just going to leave it. There's not really much to say here. Now when we go down to accounts receivables, we want to see, well, who owes them these accounts receivables. This is very important. Oh, it took me right to it. Control F is your friend. Receivables, we want to see. Okay, here's the risk. One customer accounted for 18%. That is huge. I'll tell you why in a minute, so let's put that down. 18%. And the other one accounted for 16. And another one accounted for 11. Okay. And one accounted for 10. So equals sum. Let's sum all these up together. And we get we go 18%, 16%, and 11%. Alrighty, so we got just 3 customers account for 45% of their accounts receivables. Now, why is this important? Well, I would have to find out who owes them these accounts receivables, who exactly they're doing business with. But let's say that this company who owes them 18% accounts receivables is a company that isn't really well. They might have negative equity or something like that, and they don't have a lot of liquidity to withstand a storm. You probably want to, do the worst case scenario. Let's say that this company goes bankrupt. Well, how would that affect the balance sheet? So let's do that right now. So we want to do that times that. It's 9. So that would take about $10 million off the balance sheet if this company was to go bankrupt, and not pay it. So that's what you want to do, because it does happen in every company. Sometimes you don't even have to, worry about that risk, because the company that they're giving those accounts receivables to, or if you don't know what accounts receivable is, it's basically like they're either loaning them supplies, and they'll get paid in like 60 to 90 days or something like that. So if these companies were to go bankrupt, then these accounts receivables would go to a fat zero. So that's what we're trying to do here, is figure out and look at the risk factor of this. because sometimes you'll see companies that have a lot of accounts receivables, um, and you want to see, well, who owes them those accounts receivables, because, well, if 50% of the accounts receivables are owed by one company, you want to go research that company and see what is their liquidity and what is their current liabilities, and see what's the odds of them going bankrupt. All right, anyways, let's get on with the valuation. Obviously, we want to take that minus that, get 43 million. Now inventories, I don't think they have them listed. If I was to go in here, let's see if they do. Let's see if they, sometimes they tell you exactly what the inventory is, in which the inventory is very important to know, especially. I'll give you an example in a minute when I'm done looking, but if they give me an idea of what exactly are these inventories. Looks like they do not tell me what the inventory is. Use FIFO, okay, first in, first out, alright. Yeah, they don't really say what exactly the inventory is, but I guess I'll go back up there. Let's go back to the balance sheet real quick. But I'm going to give you an example of why it's important to look, because that will determine what exactly you're valuing that inventory. One of the companies that I was researching before, NVFY, Nova Lifestyle, um, most of their assets were in inventory. It was a furniture store. So me thinking, oh, it's a furniture store, they probably have furniture as their inventory. No. When I was researching, they owed most of their inventory was therapeutic yoga mats. So what the hell you do with a therapeutic yoga mat, I have no idea. That would be automatically taken off the valuation. I don't even know. So let's say this company um, was to go, Genesco was to go on a have to sell this inventory at a fire sale. Let's say they were. So when you walk into a store, into a clothing store, and they have a fire sale, what do you usually see? Probably like 40% off, 50% off. So we want to put that in. So let's do that real quick. Let's say they do let's say a 40% off. It's clothing. So, and I think it's important to realize also that this is stated at cost. So that's another important factor. Um, which that could be, good, good. Okay, just keep going on with the valuation. All right. So then we want to come over here and equal sum that minus that, and we get 220 million. So then we also, just to make this pretty much here, let's make this over here. Let's do this. Let's go for the 20%. Let's say 20%. Alrighty, actually did 2,000%. 20%. Did I do that here? No, I didn't. Okay. So equal sum. So I could just go in and change them. Minus. Okay. Now let's add total current assets up. We go. So let's put the original up here, which was original 507 million, and then our new one is going to be. We want to go that plus that plus that plus that. So now the new one took off about 150 million, so that's pretty huge. Now we go to the long. Let's go long term as. That's okay. Okay, now we want PP and PP&E, PP and R. Okay. So let's put this over here. See exactly what is it. Property, plant, equipment. You usually just want to leave property, plant, equipment the same. I mean, what do I mean usually? Most of all the time. And they have operating lease, so they're leasing out space. That's $436 million of their assets. 436, 896. Oh God, goodwill. Oh no. Let's put this down. Goodwill and intangibles. Alright guys, you're always going to get rid of goodwill. That's like a known fact. Get rid of it. Never put it in the equation. Intangibles. Now the intangibles, sometimes you take them out, sometimes you put them in. So let's go see. Okay, let's see what exactly these intangibles are, because that will determine exactly what. Okay, here we go. Goodwill. Okay, other intangibles major classes will follow. Okay, so gross other intangibles. Okay, so we could see here that most of it is $21 million trademark. Okay, of this thing. All right, so we want to take that off. That is getting taken off the balance or taken off our valuation, our liquidation value. Let's go back to the balance sheet. Um, okay. Non-current. Okay, we're gonna keep that. So non-current prepaid income. Non-current and then deferred income taxes. All right, and then other non-current assets. Alrighty. Let's put that in. So we got 56 million, 56, 839. We might go down to 26, 230, 26, 230. Then we got 25, 493. And we get a total that okay, wait, I don't have on that screen. Okay, now that we have everything listed, okay, so I'm going to show you guys some things. You want to get rid of goodwill all the time. Goodwill is not worth anything. Do not ever put it on evaluation. Intangibles, we already seen there that is a trademark. Take it off. It's probably not really worth $20 million. Just take it off. I mean, it's not just always get. Most of the time, you're getting rid of them. I mean, if you're looking at a cable company or um, even a radio company, anything that has to do with like what's it called, contracts or rights, you're gonna have a lot of tangibles. Anything with TV a lot is gonna have a lot of intangibles. So now we want to go here and we want to just sum all these things up. Okay, we want. Okay, what am I doing? Okay, guys, bear with me. Okay, this, sometimes I have to use the mouse. Plus that, plus that, plus that. Alrighty, now let's do total assets. This is total assets with the discounts. Whatever you want to call them, discounts or whatever. You got $1 billion. Now we want to go and get the total liabilities. Guys, remember this is just a quick evaluation, so I mean, this is just to get an idea of. I mean, we're doing some steep discounts on this thing. So 758 million. Let's go back here. We want to take this and we want to go sum that minus that, and we get 335 million with that's the fair value. That so this is the fair value. Now see we want to shares outstanding. And of course, you see shares outstanding at the top of every single filing, or well, at the top of every. We have 11. That over there for a minute. Let's put 11, 4, 7, 6, 3, 8, 1. Okay, boom. And all you got to do, you got to divide that by that. Oh, wait, I messed up. We forgot we were in thousands. Okay, there we go. So now we have that. So we can see here if we do all these discounts and it's current. So value per share, and we want to do current price, which is 26, right? 26 something, 60 or something. And now let's see the upside on it. Upside uh, equals sum. That. Okay, dude, I'm just not kidding. I don't know why it's doing that. And we just oh my goodness. Oh my goodness. Okay, I messed up the valuation. Okay, guys, bear with me. I'm a little retarded, but it's okay because we're gonna get down to this. Okay, you know what? It keeps coming on negative. You know what I'm gonna do? How about that? Yeah, 10% upside. That's what it's saying. Now if we go up here, let's say we just discount the inventory, you can see well this share price is changing. I think I might have left something out. Let me make sure everything's right. 240 million, 436, 30. Okay, non-current. Let me check the balance sheet. I'm basically doing this live, so you guys get to see if I made any mistakes. Did I put other non-current? Yes. 26 million 56. Okay. Okay, so yeah, that's right. We did everything right. So this is the quick evaluation of this stock. This is just the liquidation value. I was gonna do discounted cash flow on it, but I was looking and it's just so inconsistent. It's like literally just it's negative 1 year, good the next year. I mean, it's just so negative, negative and positive that it's just hard to even. But this thing's traded under liquidation value, which is, I mean, if we're looking through this mount, like I'm gonna show you guys something that I found interesting with this stock. Let's go see. Hold up. Something interesting that I really liked with this stock, and that is share buybacks. They are actively buying shares. Let me see. I gotta find it. Where is it? Why isn't it showing up now? Okay, here we go. Alrighty, let me put it over here. Look at this. They are repurchasing 1.2 million shares during fiscal 2024 at a cost of 32 million. So they are buying back stock at 25. So this management is doing what it should, and that's buying its stock for an undervalued price. And they announced an additional 50 million. So I mean, they are buying stock actively back. This is a great sign for shareholders, and they have been buying stock back for a while now. But I think this stock is worth looking into. I mean, if this stock was to go down, is that what is the share price right now? 26. Okay. So this stock was a drop. Damn, it went to $19. Holy crap. I mean, if this stock was to go down again and have it's gonna be a solid buy. I mean, it's just all in. Like, I could sit here and only put a 20% discount, and that will put it up to $35. But I don't think there's. Would I buy it? No, I don't think there's much of a um, margin of safety here to buy. But it is a very interesting play. So a lot of these stocks, a lot of these apparel stocks did go down. Um, in that time I just showed, and now they have kind of gone up. But this stock is very interesting. Tomorrow, I'll probably post a video on Vera Bradley, which is another interesting apparel stock that I found. But I hope you guys learned something from this. If you want more videos like this, like and subscribe. Please, that would help a lot, especially since this is my first video.